Hello and welcome to the Fincast. This is your weekly podcast where we break down the most important finance and market news from leading global newspapers. I'm your host Arsalan, and in this is the second episode of Fincast. We will cover major financial developments from 16th Feb 2026 to 22nd Feb 2026, drawing insights from Financial Times, Wall Street Journal, The Economist, Nikkei, and the Economic Times. Let's begin with Europe and the global markets, starting with the Financial Times. According to the Financial Times, one of the most closely watched developments this week was the intensifying race to succeed the president of European Central Bank. Spain became the first country to publicly signal its intention to nominate a candidate, triggering broader debate across the Europe zone. The Financial Times notes that this is not merely a political appointment. The ECB presidency directly influences interest rates, inflation controls, bond markets, and financial stability across Europe. Earlier this week, on 17th Feb, the Financial Times highlighted renewed volatility in global markets, driven largely by uncertainty across US trade tariffs and protectionist policy signals. Investors turned cautious, particularly in export led economies and emerging markets. By 22nd Feb, the Financial Times also focused on geopolitical risks, entering market pricing more aggressively, especially in defense and energy and commodities. The paper stressed that investors are now treating geopolitical developments as a core financial variable, not a background risk. Leadership uncertainty at central banks, trade policy risk, and geopolitical risks are reshaping global market sentiments. Moving on to the next, which is the Wall Street Journal. And we are now turning to the United States. The Wall Street Journal on 18 Feb reported that markets were increasingly positioning for potential Federal Reserve interest rate cuts later in the year. Bond yields moved sharply during the week as investors reacted to mixed signals on inflation and economic growth. On 20th Feb, the Wall Street Journal highlighted rising cost pressure in US banks, including higher compliance costs, technology spending, and wages. Despite solid revenues, banks are facing tighter margins, prompting renewed focus on efficiency and cost control. Later on 21st Feb, the paper analyzed corporate earnings guidance, noting that while reporting earnings remained resilient, management commentary turned noticeable cautious. Executives cited global uncertainty, geopolitical risk, and slowing demand in certain regions. The key takeaways from the Wall Street Journal are US markets are balancing optimism about future rate cuts with cautious over cost and economic momentum. Moving on to the next paper, Economist, and now we are discussing the global analysis. In its 22nd Feb edition, The Economist described financial markets as appearing calm on the surface but turbulent underneath. While major indices shows limited movement, the magazine pointed out significant internal market rotation, particularly away from richly valued technology and AI-linked stocks. Investors are reassessing long-term growth assumptions and questioning whether recent valuations can be sustained. Throughout the week, the economists also focused on broader structural themes, including rising government debt levels, long-term inflation risk, and widening divergence between advanced and emerging economies. The key takeaways from the economists are markets may look stable, but deeper structural risks are quietly building. Moving to the next paper, which is Nikkei, and now we are shifting to Asia. Nikkei Asia on 17th Feb reported continued weakness across Asian equity markets, particularly in Japan, as investors took profits from earlier AI driven rallies. Trade tensions and slowing global growth weighing heavily on sentiment. On 19th Feb, Nikkei Asia published an in-depth analysis of China's prolonged automobile price war, estimating that it has destroyed nearly $68 billion in industry value over the last 3 years. The report warned that sustained price competition could lead to consolidation and government intervention. Quite important and interesting. By 21st Feb, Nikkei Asia also noted how Asian manufacturers are diversifying supply chains, reducing dependence on single markets to manage geopolitical and tariff risks. The key takeaways from Nikkei are Asia's markets are adjusting to slower growth, industry disruption, and rising geopolitical complexity. Moving to our last newspaper, which is the Economic Times from India. And now we are finally to India. The Economic Times on 16 February reported a sharp increase in banks selling non-performing assets, especially retail loans to asset reconstruction companies. This reflects continued balance sheet cleanup alongside the lingering stress in unsecured lending. On 18th Feb, the paper highlighted renewed foreign institutional investor activity, including strategic stakes in Indian financial and infrastructure companies. By 21st Feb, the Economic Times reported range-bound movement in Indian equity markets as investors remain cautious ahead of global central bank signals and domestic policy developments. The key takeaways for the previous week is India's financial system remained resilient, but credit quality and global volatility remain key concerns. That's bring us end to this weekly broadcast, your weekly roundup of most important finance news from the world's leading newspapers. If you found this episode useful, follow Fincast for weekly insights into global markets, policy, and finance explained clearly and consciously. Thank you for listening, and I'll see you in the next podcast.